It is, I hope, quiz day. It may not be quiz day. I haven't seen John for a couple of weeks. Hopefully he'll be about today and we can do a quiz. If not, then I'm sure Ash and I will find something to talk about around the charts. And of course, if you guys have anything you want looked at or got any ideas about what's going on in the market or want to discuss anything that's going on in the market, maybe you've got some trades that you want to look at. That would be fantastic also. All right, let's get underway. Ash will be joining us shortly. But before we do go to Ash, we'll have a look and see what I can find. First thing I'm looking for is the share screen button, and there it is. Found it. All right, let's take a look and see. Game changer bar. Oh, hang on. We better have a look at the pound, had we not? See if there's a breakout trade to be had. Oh, look at the range that we've got. We've been in this range. This might be interesting. This could be very interesting. We've been in this range all the week. Okay. The range that we're looking at, unfortunately, has this little false breakout here included. Let me see if that's going to be viable for us. It'd be a shame if it wasn't. So yesterday's range really is as it is, 156 odd pips. Add the spreads, you've got about 160 pips of risk there. Let me see what that means in terms of reward and if it's possible. So there's your range around about there somewhere. It doesn't look too bad, guys. This might be the one. Don't like that high there, which is about halfway. Monthly pivot gets you around about 1-to-1. That's cool. And that low gets you about the same. I'm okay with this one. Yeah, 1-to-1 to there. Cool. All right, we're going to trade this as breakout. That's our real risk there, in my humble opinion. So I'll give you some parameters around this. Now, don't forget, this is a trial system, not a proven strategy. So do not trade this with any risk on the table. In other words, don't trade it with any money on the table, or if you do, make sure it's very much a micro lot situation. So I'm going to go short at the level is 1.2159. So 1.2159. I'll actually put that in. I can put it on the trade manager, I think. I'll do this as an OCO. This may take some time, guys, because I haven't done this for a while. Trade manager 4.32. That's the one I want. Okay, so 3 pips underneath there, 1.2158. I think I said 59. That's where we're going short. That's not what I want to do either. Input. First thing we've got to do on here is go allow OCO. If I can find the dash thing, it used to be right up the top. There it is. Enable OCO. True. What does that mean? Those of you who don't know, it means one cancels the other. In other words, if one triggers, the other one does not. In fact, it gets cancelled. Buy at entry level 1, sell at entry level 1. That's the one we want. So check that to true and put in the level, which is forgotten already. It's not going to show me. 1.2158. Pretty sure that was right. 1.2158. Stop loss will be the high, which is 1.2218 plus 5 pips, 1.2, sorry, I'm squinting here, 1.2323. 1.2323. There we go. That didn't work. Why not? I'll come back. Told you this would take some time, guys. 1.2123. No, 2223. 1.2323. I'll get there. Stop loss 1.2323. There's somebody trying to message me. I don't know what. I can't see it, so I don't know what it means yet. And I'm a little bit tied up in this. So that's the stop loss for entry level 1, which will be the buy for entry level 2, which is 1.2323. Now, if this takes off before I get these in here, it'll be something to behold. Hang on a sec, guys. I better see this may be urgent. Apologies. Okay, got it. It's
Hello,
Ash.
mate.
Hello, buddy.
Yeah. Hey, mate, how are you?
I'm not too bad. Have you got a trade?
No, I haven't got a trade, mate. I mean, there is a trade. There is a trade, but yours is probably just there's a short on the FTSE. I don't love it. I've got to be honest.
Well, I'll continue on with this debacle, will I?
Yeah, continue on that. We'll talk about the FTSE in a moment.
2158. Right. So we've got both the stop loss and the entry level in for the OCO. We are going to, that's all we need to do at the moment, really. TP1, we can do all that later. So I'll just put that in the market, hopefully. And it's going to ask me a couple of questions. First question, sell at entry level 1, yes. Second question, buy at entry level 2, yes. Okay, so they're now in the market, those orders. And as I say, we will adjust the TPs as necessary. But essentially what will happen now is if this long gets triggered, the short will be cancelled and vice versa. We'll go from there. Righto. Mate, I think that's all I need to do at the moment except fix that up. When you've done yours, I can come back and give you some analysis. I don't think there's anything else that's urgent at the moment.
Cool, mate. Okay. All right. Yeah, let me show you what I've got. But I mean, well, let me show you what I'm doing, I suppose. It's difficult really because the way things are laid out for me is very different from everybody else. So I've just taken a short. Well, I took a short little while on the FTSE, but and the short was just on this daily pivot here. But my short is really just kind of hedging out this position. I mean, I've got this short up here and a couple of longs in here. So really, I'm just flat right now. But I don't. I'm looking at this FTSE and I'm sort of seeing this inverted head and shoulders kind of forming here. Now, obviously, there is little reason to the for the FTSE really to kind of give us an inverted head and shoulders. Let's see if we can clean this up a little bit. It's probably like this. A little bit of false breakout there, but you can see sort of there's the pattern there. And I'd be a lot keener on the FTSE after it's kind of touched. So here, with this as the neckline up there. But I'd be a lot keener on the FTSE, a lot more keen on the FTSE if we had already touched this level. If you know, that's the area that I'd like to go short. I think the one reason that I'm sort of okay with a hedge position here is that it just flattens off my positions completely. So I'm basically at zero right now, but I'll probably take profit. As we come down, I might well take profit because I've only really got one position in anyway long because the other one's hedged out. So I'll probably take profit down here and see if I can get that boost up there because that's where I really like to go short. Now, if this does start to take off, I'm still pretty comfortable because the overall direction for these markets is lower. So you can kind of be, or I sort of usually feel that I can be a little bit looser with my entry because as long as the kind of overall sentiment is, as long as I'm along with the overall sentiment, then I should be okay. So that's the idea here, mate. That there's the market is weak. The market is coming down. I just don't think this is the ultimate position to go short on. Yes, it looks like we might just be able to grab a few pips out of this, but I don't think this is the real place. I think it's up here. So I'll be looking at, I guess, what yesterday's daily pivot would be, which is still actually 100 pips above where we are currently. So I'm looking at a little bit of a run to the upside. I mean, what's going to cause that? I just can't tell, because the news, the data, the sentiment is all down. The only thing that we always have to remember is that traders will have a position where they believe things are priced in, and the market has come down relatively sufficiently. I mean, it's come down a long way from the high point up here, and in all intents and purposes, the FTSE 100 is still quite well protected. It's down around about 8%, from the highs. Nothing anywhere near as bad as the Nasdaq or the S&P. But at these kind of positions, you start to wonder whether traders are going to start to think, actually, there is a little bit of value here. And if there is some value, then we'll take a punt in this area. So they'll start building into positions here. When it drops down again, they'll dollar cost average down, because that's the strategy that many of these pension companies will basically follow. So there could be rallies. We might get sort of like a couple of rallies as we're on our way down. I do think that this lower end, the lower area here, is likely to be seen at some point, and that's probably the area that I will be a bit more comfortable going all out long. And if we kind of look down the longer term time frames, this is another reason that I think this area might well get just a little bit of support. It may attempt to try and get above this level, but it also, when you look at this, it does tell you that the ultimate position is probably it's probably going to be short from here, and we could fall down quite a bit more. It might be there. It might drop down another area there. That would be a good point to pick it up around about 6,500, but FTSE does look weak, but we're going to get a few days to upside. So if we compare that with the NASDAQ, has the NASDAQ seen a decent level of support? Probably. This is the key area for me. Now, this is the high previous to COVID, and it's a key area for obvious reasons. This was before any kind of anything in the market kind of all of a sudden started to mess this market around. And this is when interest rates were already starting to be pushed up. So we already sort of like had bond yields starting to push up. We had interest rates starting to push up before the COVID situation made central bankers completely about turn and start to lower the interest rate again, just to kind of boost the stock market up. So I think this is the interesting area, and I think this is the key point that I'd like to see the NASDAQ at, to see what kind of sentiment traders go into. But I think that there will be some, regardless of anything, I think there'll be some bargain hunting around about that point. Anywhere I would have thought in this particular area here. And the responsible ones, that wasn't the shape I wanted. The responsible ones, the responsible hedge funds and pension companies won't be using leverage. They'll just sort of like try and edge their way back in. So they will be able to kind of dollar cost average in this kind of zone down there. But that's the area that I'd like to see before we say, we could well be turning around, or we might now be priced in with all the bad news, and then it's just waiting for good news. That's the area I'd like to see. The flip of that is that all of a sudden things could change and we might start getting some decent news coming out, but that just doesn't seem likely. With a Fed sort of on a charge to curb inflation, and nothing on the other side of it, sort of nothing on the supply side. That's the big problem. There's nothing on the supply side which is helping the inflation picture out. The only thing that is happening is that the Fed are trying to attack the demand side, and the way they're doing that is, even though they're not saying it, they're trying to cause a recession. Because if they cause a recession, then employment will come down. People will start tightening their belts, and if they tighten their belts, then they won't be paying for so many goods. If they don't pay for so many goods, those goods will have to drop in price. So that's the way that they're trying to attack inflation. And until we start to see some of the numbers come through that would suggest that that's happening, then I think we're pretty much in the same position, and we're coming down. I don't see, there's these unemployment claims out today. I see, but the unemployment numbers all of a sudden, I'll tell you what, mate, we always have a bit of a joke about the non-farm number being completely benign. I think that might be about to change.
Okay.
Because that's the number that they, or that's one of the numbers that they need. They're going to be reading, to see whether their measures are working. Are they managing to curb the expansion and stop people kind of getting so many jobs? Because that really is the only thing that they've got. It's the only powerful tool that they seem to be focusing in on. But the mess continues, and it
certainly does.
Again.
You said a little bit back that we haven't seen those numbers come through yet. Fasten your seatbelts, mate. These numbers aren't going to be good. They just can't be good.
Well, are you talking about the recession numbers?
Yeah, totally.
Yeah,
and
agreed.
And the supply side, as you say, until that's fixed, we're in heaps of SH1T.
Yeah.
The inflation story, which is now worldwide, like it or lump it, is not going away anytime soon. And the numbers that you were talking about before are absolutely on the doorstep as far as I can see, because people have to stop spending money, certainly on recreational activities, without question. Anything that's not essential is going to be a tough call, because, and if anything like Australia, housing markets now come off, understandably. You've got a situation where we're paying, I think it's now $11 or $12 for a lettuce head. People just can't afford that. And the fuel price not going away anytime soon. Gas prices, my God, I just bought a new bottle of gas yesterday. It's gone up 25%.
Amazing.
And that's only one thing.
Yeah.
It's pile on. So I don't see people out there willing to open up their wallets, let me put it that way, on anything that's not essential, because they're going to have to. There's no option.
Yeah.
I mean, if Europe goes into another winter, or if the Northern Hemisphere goes into another winter, and these gas and oil prices are still nuts, wow, what's going to happen there?
Yeah, absolutely, mate. Yeah, absolutely. So I was just seeing Lewis is making sort of some similar points. He's basically saying, with the war and inflation going on, just put money in short indices and wait until the war is over and inflation tapping out. I mean, that's fair. And he was also making a point about the FTSE, needs to drop another 30% to catch up with everybody else. And I think that it could happen. The only thing with the FTSE is that it is a commodity based. So that's sort of like one area that it might be in slightly better kind of shape than everybody else. I'm just going to have a look at whether I need to close this FTSE trade.
I need counselling again, by the way. I'll go through that shortly.
Oh, yeah, you need counselling. What's this one for?
Oh, yeah. Euro Swissy, basically. I'll tell you about it in a minute.
Oh, yeah, no, let's have a look at it, mate. I like the Swissy.
Okay. When we left you last, in fact, I've got a few results from last week that I need to share, I suppose. Where is this bloody button gone? There it is.
I'm just closing that FTSE trade down. I mean, I don't know. It's almost against my better judgment to take profit on that FTSE trade because the market is so weak. But I'm just looking for that neckline.
Okay. You'll let us know.
I don't think. Yeah, Lewis is asking if he thinks that I think the FTSE will be as affected. In a way, I don't think it does. The thing about the FTSE is that it is made up by international companies, really. You know, we're talking about Shell and AstraZeneca and Rio Tinto and Anglo America. So because these are kind of international companies, they won't be as affected. If you compare the FTSE 100 to the FTSE 250, which is domestic stocks, the FTSE 250 is obliterated. It's like 30% plus down. FTSE's down like 8%. So I think the fact that these companies do kind of trade internationally does help it out. And they provide, as I say, essentials. So it's not the luxury items that some of the other indexes provide will be affected worse than the FTSE that provides, as I say, it provides more essentials. The upper end of the FTSE 100 is made up of more essential items and more essential commodities. So that would be my take on the FTSE, which is why it's the perfect hedge, really. FTSE long and NASDAQ short, maybe less so now because the spread is widening, but certainly in the early sort of period, it was a great hedge to trade FTSE long and NASDAQ short.
Cool. Okay, so last week when I left you guys, you'll recall that we got into Eurocad during the show, actually, on the basis of trading a game changer bar or a reversal bar, 2 in a row, actually, 3 in a row, one there, one there, one there, all showing you downside. So we looked at an entry point better than this one, because I hate trading red bars, as you know, short. So we found one on the 4-hour chart as a clear false break, trading the break and retest basically of that trade line. And kaboom, kabang, the news, of course, helped out dramatically there and took us way down to here. Of course, I was trailing stops, took profit here somewhere, took profit here somewhere, and then trailed my stop down to here, I think it was. That makes sense. No, it was above the weekly pivot, this week's weekly pivot, that's right. And then wise old me saw this daily bar, this one, and thought that was an excellent place to take another position, which I did. And of course, my stop loss was there. What could go wrong? Everything looks great, except that I happened to be in front of the charts yesterday when I saw this bar here. And I immediately moved my stop loss to 101.88, which is right there. And look at what happened. You prick. Took me out by 0.4 of 1 pip right there. And here we go again. And I really have to apologize to those of you who weren't in the first trade, but got into the second one. If you followed me, if you didn't follow me, fantastic. You'd still be in the trade. In fact, I only updated this in the Telegram group. And yeah, look, just wow. NASDAQ. We were also in the NASDAQ this time last week. And we did pretty well out of the NASDAQ, I've got to say. Again, 3 lots of profit on that. Trailing stop went to there. So I think that's right. That was the point that we got out of the NASDAQ. So we're now out of the NASDAQ, similar but not as painful. And euro dollar, exactly the same. 3 lots of profit on that one as well. And the trailing stop, once again, has been hit when I put my stop loss above that one, I believe. So out of all 3, and Euro Swissy is really the one that I need counselling on. 0.4 of a pip. Oh dear. Now, do I want to get back into it? Answer, yes, I do, but I can't just yet. It's in a whole mess. But if I saw a false break of resistance, of course, not this one, because that's dead in the water now. I've got to get rid of it. Maybe a break and retest. I'm not a fan of that, I've got to say. I'd much rather see it get up here somewhere and give me a false break now of resistance. Maybe that one up here, back underneath, retest, and away we go. Don't really want to trade short at these lows. A couple of others. I do have one order in the market at the moment. It is Aussie Kiwi short. Aussie Kiwi short because of this false break potential. I'll only have to call it potential at this point. Traded this bar yesterday, no entry, and then we've got a better entry today, in my humble opinion. A potential break, bounce off the weekly pivot. Entries there underneath, stop loss there. Problem? Yes, there is a problem. This level here is a problem. So I'm taking it on trust that we get through that. My first take profit is at the open of that bar right there. And if we are fortunate enough to get this reversal, we'll be targeting something down here somewhere. That's Aussie Kiwi. I think that's the only one I'm in at the moment, only order I've got at the moment. I do have two game changer bars. Of course, that's the pound ones pending. I'll get rid of those so you can see something. Eurocad was a game changer bar today. Now, Eurocad, my analysis on Eurocad is very much wait and see. This is the market structure that I've got in front of me. We've bounced off the bottom of it. We've got the higher low. We're headed towards the top of it. Tough to enter here, despite the game changer bar telling us it's now time to go long. So I'd have to wait until we get to the top of that structure. The other game changer bar, there were only two today. Dollar Swissy was the other one. Dollar Swissy, interesting. And I think you like the Swissy at the moment too, Ash.
Yeah, I do.
What I'm trying to get back into. The only problem with this one is, yes, it's a game changer bar. And I'll go a bit tighter so you can recognize it. Yes, it's a game changer bar, but it has come off its low. So it's not bang on its low, and it's not really that near its low. Today's bar will be interesting. And if I do see this pull up short of that horizontal level, about 96.45-ish, or even if it's just like that, but any inside bar here would get me interested, and I would put an order underneath it with a stop loss above it, maybe above that yellow line, and I'll be getting some profit in the bank before I hit this one. Again, if this is a reversal, then we're looking at 91.80-ish. So that's 500 pips away from where we are. So I'm very, very keen to get that position if possible. Won't trade that bar, but I will trade this one if it is an inside bar. We shall see. The one I'm really interested in is this one. Pound Aussie, and I've been saying all week to my guys, this is just bursting at the seams here. It just wants to go higher, but I can't trade it here. It's a terrible level to trade it from. What do I need to see, and why do I like it, really? Well, I think I mentioned this last week as well. If you have a look at the sentiment cycle, I think that's very much near a replica of it. Where are we in that cycle? I believe that this is the wall of worry, and I'll be looking for another higher low. If we were to come down to the weekly pivot, for instance, tomorrow, that would be good, and pick up there the aversion point. That would be nice in that area. Then we're looking up here somewhere. So, depending on what sort of entry you get, say you'd be risking maybe 100, 120 pips to pick up maybe 1,500. That'll do. I'll be happy with that if that does take place. That's Pound Aussie. Can it happen? Not a fan of the Aussie at the moment, but I don't think you're a fan of the pound either, Ash, are you?
So no, mate. No, we got rail strikes going on at the minute because the government have failed to negotiate with the unions, and I don't think it's going to affect the economy that much, considering we've had COVID and everybody's been working from home. People can work from home, but again, it will affect the economy in the services economy as kind of face-to-face businesses will suffer with people not in offices buying coffee and the like. So it will, it'll probably have some kind of impact, but it's just one thing really that is against the United Kingdom. The Brexit situation is just starting to filter through a little bit as well, and they're kind of calling of a potentially sort of some kind of shrinking of GDP, just a lack of growth because of just not being competitive, not as competitive as the UK was. So no, I'm not too keen on the UK economy. I think the UK economy is going south, but I think that it's one of those things that it will take decades to erode. You know, this is really, if you sort of like think back in history about how long it takes for these economies to erode, it does take a long time, even when they appear to still be, you know, a major power. They're probably eroding from within. You know, ever since World War II, I think that when as soon as the UK was stopped as the pound was stopped as the reserve currency of the world, then it just took a leg down. It actually was quite a big leg down at that particular point, but it's just constantly just you know, disappearing. And they don't make anything. And obviously, sort of the big thing before, that wasn't a problem. You know, when you can just go and invade another country, and it's acceptable to go and do that and use all their commodities and resources, then you can continue to kind of, you know, play a major part. But when you've got to rely on your own products, then you've got to have something that you're going to sell to the world. And
it helps.
They haven't, yeah, just haven't really got anything. You know, China have done really well because the thing they sold to the world really was manpower. And, you know, so much is made over there that that inevitably their economy starts to grow. Same thing will happen probably with India. But it's similar, you know. Just interesting, really, what you know, Lewis's questions about the FTSE and the stock market. When you sort of consider the makeup of these indices and the makeup of what makes up you know, every single index, the companies that are part of every single index, you kind of that's what you need to do when you look at currencies as well. You know, what kind of state are we in right now, and which currencies are likely to which countries are likely to do well out of the situation that we've got right now. And if you can figure that out, then you can see which ones are much more likely to strengthen and much more likely to weaken. The UK just doesn't have anything. You know, the FTSE 100 is completely aside from the UK as a country. It doesn't really have anything to kind of bring to the party. No. I think Australia at least does have the
resources.
At least, yeah, it has the resources, exactly.
Got a lot of uranium too, mate.
Yeah, well, yeah. You keep telling me about the uranium. Yeah, so it's got a lot of that stuff. and the thing about Switzerland, this is one of the reasons I like the Swissy. The thing about Switzerland is that what it does provide is a lot of confidence, because where a lot of the other countries, you know, America included, overreaches itself and over leverages itself to kind of like, you know, to go and get to the top of the pile. The Swiss don't tend to do that. You know, they tend to be quite measured in their approach to kind of economic expansion. And it's a bit like the hare and the tortoise, where at times like this is where all of a sudden the hare is kind of eaten too much chocolate and is fallen asleep, and the tortoise is just kind of rolling right on by. And that's the way I kind of like I see the Swiss economy right now. I just think it's a solid performer. And in an environment like this, you're always trying to pick what is the currency that fits well with the type of environment we're in. I think a few weeks ago it was definitely the CAD, as we saw oil prices start to skyrocket and everything kind of going on with Russia. But we're now starting to switch again now, and I think that you're looking for that bit of safety while having a country which is still expanding. So there are sort of like still things to buy from there, and I look at the Swissy and that's what I see. So that would be my preference, and it's difficult when you sort of like compare the Aussie to the pound, as you say that the Aussie probably isn't in a particularly good position, but I don't think that the UK economy is either. So you sort of it's a race.
I won't say it's a race to the bottom, because I think the Aussie has far better prospects than the pound for all the reasons you just said. But at the moment, I think not. I don't think that's the case.
Yeah. Well, if the UK was performing, I'd be on board, but it just isn't. It just isn't. You know, it's in all sorts of trouble.
Yep. Look, I've just posted a link to a video, Ray Dalio video I watched during the week. You guys may have seen it. It's called The Principles of Dealing with the Changing World Order. Very interesting. And it goes along with, I think I pointed out a book to you guys a couple of weeks ago. I can't remember what it was now, but I'll come up with it. It's very, very similar to the book and interesting. If nothing, I'm not suggesting you take it on board as gospel, but yeah, very, very interesting look. And geez, put a lot of work into it too. Well, I'm sure he didn't do it, but somebody else has done all the work for him. But it's very, very interesting. So I have a bit of a look on that. And Lewis, sorry, I didn't say good day to you, as you said earlier. And Paul P, good day to you. I thought you said happy birthday, but it was happy Thursday. Yes, look.
Simon's in the room, mate.
Hey, guys, how you doing?
Oh, yeah, not bad, mate. Not bad. How are you?
Just wanted to pop in and say apologies for my my absence in the last week. My partner's run off to Canada and left me all on my own, and she's run off on a mission. She's run off on a mission to beat the Vancouver bubble pop that's about to happen. She's got a property in Vancouver. She's had it for 20 years. She bought it off plan. I had a conversation with her at Christmas saying, you probably want to get over there this year and get ready, because it looks like there's bubbles all over the place, and property at some point, Vancouver's overpriced anyway. So she's gone over there trying to sell that property. I've got people off work, and this week's been mental. And I've just popped in to say that, Jeff, you're right. That Ray Dalio thing is brilliant.
Oh, you've seen it, have you? Good.
I've seen it. Yeah, I've seen it. I've shared it. Yeah. I've seen it. It's really good for people for guys that aren't for guys like me that aren't that clued up and should be more clued up. It's a brilliant 45 minutes that shows basically how the world order changes in its cycles. It's brilliant.
Yeah, Ash just reminded me of it when he was talking about the pound being the reserve currency back when. Yeah,
the Dutch for a while, wasn't it, from what I can remember? It was a really, really good watch.
Yeah, totally.
Anyway,
you're in the dark there, buddy. You look like you're one of those people on a current affairs show who don't want to show their face.
Probably because
because you got light behind you, that's why.
Yeah, I quite like it. It's good.
Simon in profile. Look, I've just got one thing to point out here. Then I want to talk to you about Bitcoin a bit. Lewis, back to your point. I don't know if you trade exactly the same thing, but that bar there is 100%. You've really got to get interested in those. Take some profit there, and then just watch it go. And the thing I did want to point out, if you've seen the last 3 or 4 trades that I've taken, they're all false breaks. And I think if you keep watching for those at the moment, for the false breakouts, you should do relatively well. That's all I have for you at this point. So tell me about Bitcoin, mate. 20K.
Yes, mate. Have I got power? Let's have a look. Shares.
You can have. Sam, can you sort that out for us, please?
No, I'm good. I've just been off for a couple of days. Share that screen. But before I got busy, I just placed a load of quite a few limit orders because I don't know where this is going, but I don't want to miss some of these buys. So I've got all these buys in. The yellow ones I just got filled last week. So my highest position was 19,500. That got filled last week. But I got orders in all the way down at 17.1. These are dollars, right? 15,500. Another order in at 13,500. And obviously, as I go down, I'm buying more. So I don't know. I haven't looked at a Bitcoin chart for 2 or 3 days, but I don't want to be left with no dry powder when I think the inevitable. I say inevitable. I don't know. I got 12 grand.
You'll say it's a good word, that inevitable.
Yeah. I'm not going to call the bottom. So I want to buy as much as I can in the range at the bottom. So if I look at all my indicators, look at where we are in the cycles, look at all the clues that I've got. I don't think that we're at the bottom because my indicators don't all flash and say that. I think there's at least one more leg down. There's got to be some capitulation. There's blood on the streets. We can see there's blood on the streets, but no one's getting shot yet. And I'm waiting for the shooting. and I may or may not change some of those orders, but there's one more big, massive, at least one more big shootout, in my opinion. It's kind of where I am with it.
It's interesting, mate. You say that, mate, because it's almost surprising how, with things going the way that they are going, how the world has been relatively quiet about it. You know, we haven't really sort of like seen that, you know, that many marches, and whether those marches turn into riots is a question. But we haven't even seen sort of like people taking to the streets and protesting, really. There's been a kind of a little bit of disquiet, but not as much as you'd think.
It's coming.
You think so? I mean, it's, you know, it would normally be down to longevity, and it doesn't appear that this is changing. You know, it doesn't appear that we've got any kind of green shoots. But I you know, when I sort of like think about what they've got, what's kind of next, what can the Fed or anybody else? I mean, let's consider the Fed because they're the most powerful. But what can any central bank do if we get a recession? You know, if they flip again and start, because the problem really arose. This big problem really arose as soon as they started QE. Yep. You know, kind of before with Greenspan, it was all about interest rates. Put interest rates up.
It wasn't QE part 1. It was QE part 4 or 5, wasn't it? We've had so many QEs.
Well, but this is the thing. So that happened in Bernanke. It was Bernanke that started the whole quantitative easing kind of phenomenon. So before that, it wasn't. It was just, obviously we had the Great Depression, which Bernanke was hell bent on trying to avoid, and the way that he tried to avoid that was with QE. So next time round, do they sort of eventually learn their lesson? Because Bernanke, would you now say he's wrong? QE is just a terrible instrument to try and employ, because all he sort of like ended up doing is stacking debt and stacking debt and stacking debt. Now, obviously, sort of like with raising interest rates and lowering interest rates, yes, you get into this kind of, you know, people getting into a lot of trouble as the inflation, as the interest rates start to go up and they can't repay their debt. Things collapse, and they collapse for probably longer. But when they start to repair, hopefully you put measures in place to make sure that doesn't happen again. But when you start printing money, then things just get more complicated and further out of control. So if we just go through this cycle where we're printing, then tightening, then printing, then tightening, you don't really ever take the amount of money printed fully out the system again. So you don't get back to zero. Mm-hmm. Whereas the interest rate hike and drop is pretty much kind of like, you know, that's a zero-sum game in some respects. It's black and white. But printing money isn't. So have they kind of created something which is actually genuinely unfixable? So
is this MMT, right? Is that, they call it MMT, the modern monetary theory?
Oh, where, possibly, yeah.
Yeah, where you just print. I've been reading about that, and it's yeah. I think PB's quite clued up on that, but I heard it's called MMT. Don't worry about it. Just keep printing.
Yeah, but then what happens? So if we get a recession, which in fact, when we get a recession, and the recession sort of embeds and puts its feet under the table and lasts a while, are they then going to go, do you know what? Let's start printing again, because that's what's caused this problem. So do they try and fix the problem with giving another problem, sort of like, you know, just a little bit further down the road, or this time do they go, do you know what? We can't do any more printing. It just doesn't work. Let's just lower the interest rate.
You're right, just lower the interest rate. I think they'll do both.
Yeah, and make another mistake.
Correct.
We're going to have a change. That's what this is all about.
Yeah.
We're going to have a change.
But the CBDC idea seems, to me, it seems completely dead in the water before it started. I just don't see, with the Fed having done what they've done, and at some point, okay, people probably point the finger at government, because they don't realize that actually sort of like what's going on behind the scenes is that, okay, yeah, the Fed is controlled by Congress, but ultimately they are the body which is coming out and saying that this is what we're going to do. As soon as people sort of like, you know, broadly get the idea that they can't trust what the Federal Reserve are going to do, why would they adopt a CBDC? There's just no way. I mean, would you take one side? If the government said, right, we're going to do CBDCs and we're going to know exactly what's going on, are you going to adopt it?
No.
I don't think people will. So I think it's dead in the water. I actually think now that because of what the Fed have done, I think that they haven't shot the CBDC thing down because of development. I think they've shot it down because people just won't trust them, you know, and who would? It seems a terrible idea, you know, to try and adopt it. And also it does, interestingly, strengthen the case for Bitcoin, because the reason that we're not the reason, but one of the reasons that we all like Bitcoin is because of the decentralized nature. And if we are getting this centralized body, which is basically battering the common man, then we are not going to adopt something which is going to enable them to do that further. But we'll still look for something that we can sort of you know, control ourselves. So I think it strengthens the argument, particularly if they invent CBDC, particularly if they push CBDCs onto the market. You know, if people have got the opportunity to take to the streets at that point, then they probably will. And I think that strengthens the case for Bitcoin further, as I say.
Yeah, and for those of you who don't know what CBDCs are, central bank digital currencies, guys, is what Ash is talking about. And I think
go on.
Sorry, Matt. I think it's very interesting. But the one thing of which I am pretty certain, and if you watch that video that I've just posted there, you probably get exactly the same conclusion. We are headed for a change, and what that change looks like, I couldn't tell you, but it's certainly going to be, in my opinion, a new reserve currency. Let me put it that way.
I tell you what, I tell you where things do get interesting with CBDCs is in China. That's because exactly obviously the people are sort of like they don't necessarily have the voice that they would in places like the United States, the United Kingdom. So that might be. I mean, they seem to have moved things on a little bit further than anybody else. So you know, but do they batter us into kind of into accepting this thing? You know, the general, how educated are people about this stuff? I just don't know. I don't know how aware people are of how dangerous this stuff is.
Yeah, I mean, it's more that in China-wise, it's more that the Chinese people have been forced into adopting this
the
digital yuan, right? So they're going to be the benchmark, the guinea pig, the trial run to see how that works. But you couldn't really compare their digital currency to a Western digital currency. I mean, obviously the Chinese have done that, and they're going to track every single. They can now track every single user of the digital. Is it the yuan? It's called the yuan.
Yeah.
And they're going to impose this method where if you're a good boy, you get to borrow at this rate. If you're a bad boy, you get to pay. You can't have a loan, and they're just going to control that. Oh, it's crazy. Do
you know what, mate? And this is the thing. I mean, I can almost hear people saying, well, I haven't got anything to hide. But the thing about it is that it's not about having something to hide. It's about not being able to be smart anymore and going, for example, I've got a credit card, which is at 20 grand, let's say. And I've got it at 0% interest rate. I've paid off a little bit of it, but I can't clear it. Rather than the rate going up to 7% or whatever they charge, I'm going to flip it to another 0% credit card. This is smart way to do it, right? You just borrow to the next one. They will stop that kind of thing, and they'll be able to stop that kind of thing by saying you're too irresponsible to have that sort of thing. So that's where I don't like it. Is that even if there's just a little sneak of leverage kind of coming into your particular system that you choose to do, and you choose to put yourself in that particular risk, they can stop that happening. So everybody kind of like goes on, and okay, you may not get situations where you get this kind of boom and bust, but what you will also get is classes, people's societal class remaining where it is, unable to climb because you aren't able to be a risk taker.
Yeah, no personal innovation.
No, exactly. Do not like it at all. And if there's a march, then I'll be at home with a cup of tea supporting it.
Yeah, good on you.
March.
No, but you know what, mate? That might be one thing that I would take to the street for. There's not many things, but that might be one thing that I'll probably join you on.
Yeah, cool. I hope it's down at Bright.
Not even climate change, mate. Not even climate change.
I would march for climate change, but it would have to be a specific. It would have to be quite specific. I'm not sure just about like the problem that you sort of like you always kind of come up against with this stuff is that there are certain fights you can't win. So if the argument is a little bit woolly, then I just don't really see the point. I think it's got to be led properly. You know, the kind of the way it's going to step forward is going to be led properly, in my opinion.
Yeah, it's a massive problem because the police just won't listen. And I'm not about to stand on a soapbox either, but until they do, we're headed to a very bad result, I'm afraid.
You can only fight it from within. I mean, that's the thing. You need somebody within the system who's actually in the system to be a champion of it. You know, people taking to the. I mean, look at what's happening. Say we've got this rail strike going on right now, and the argument really from the government is that we need to start lowering the pay of to try and make travel cheaper because we've got inflation going on, and they've sort of taken to the streets. We're going. Hold on, but you're raising bankers' bonuses. How does that work? So the and really, it's one of those things that in the end, you know that they probably won't win. I mean, Thatcher really sort of like has given us the benchmark for it. You know, if the government really want to dig their heels in, then they flood the coal mines, and it's sort of like it really does kind of go back down to that. So I don't know whether they will or they won't, but you do need somebody sort of like on the inside to kind of like carry the fight for you properly.
Yeah, I don't. Yeah, I mean, obviously, rail strikes aren't great, but since we went through COVID and everyone started setting up from home,
exactly,
most people just said, you know what, I'm just not going to travel today. Sorry, guys, I'm not coming in.
Totally agree.
I took our MD to Gatwick yesterday morning. He was flying up to Glen Eagles to play golf in the tournament. And it was an 11 o'clock flight out of Gatwick. I'm an hour and a half away. He said, let's leave at 6:30 because it's going to be horrible. Left at 6:30, got there at 7:30.
Really?
No one on the road.
Problem.
No problem at all. Came back on the way back. It was a little bit tricky, but everyone just stayed at home. Everyone can work from home. Not everyone can, but those that can now do. And it's not really caused that much of a problem.
Yeah. Yeah, but so they won't win. You know, the likelihood is they won't win that.
I don't see how they win that. I don't see it.
I mean, it's quite telling that the government, they haven't even bothered getting around the table. So they're obviously quite confident.
Yeah.
That they're, you know, it's like,
They don't win that. No.
Yeah.
So how do we trade all this, guys?
Oh, well, so...
oh, yeah.
Well, I'll tell you what, Si, we did want to discuss a few weeks ago was how to... Sure. How to actually trade Bitcoin, and
we're going to do that on Monday morning.
We're going to do it Monday morning, are we?
Yeah.
Okay.
Set up on Monday morning.
Okay, amazing. Yeah, because it'd be good to see that, mate. It's good to see sort of like how people basically use Coinbase or whatever the broker's going to be, almost the same as they would use Fusion or JDR, and be able to kind of not hold the asset, but be able to kind of trade the direction.
We'll set up some small leverage shorts and longs, and I'll show you how it all works.
Amazing, mate. That'd be really cool. But the way we trade it, mate, is just to go long the Swissy. I actually want to explain just one thing here, because I've been obviously I do the Telegraph posts, and somebody was asking about the Telegraph post the other day. And saying, "Oh, what's this? Do you want to cover this first, do you, Jeff?"
That's that book I was talking about. It's very similar to that Ray Dalio thing.
Oh, brilliant!
I don't know where it's available. I got a PDF of it, which I can't share, guys. Sorry, I can't do that. But it's a good read. Very good read.
Cool.
Sorry, mate. And I don't know. I'm not an affiliate at all. I'm not.
No, the thing with that is the Ray Dalio's 45 minutes, and that book's about 12 years.
Yeah, something like that.
Yeah. Okay, cool, mate. Thank you for that. Okay. Right, I'm just gonna explain something about the Telegram channel, because the Telegram. Somebody's asking me about the Telegram channel. They say, you know, you put all this stuff out. This is a buy. This is a sell. Whatever. But you know, how long does it last? Well, the idea really is that it lasts for the week. And if it lasts for the week, that means that you should be looking for opportunities on the hourly chart. So I'm going to take the pound Swiss as my example, because the pound Swiss was the call this week, short.
What Telegram channel is this?
It is the FX FX. What was it called, mate? Let me just double check.
Yeah, it's really good.
Thank you, mate.
Is that the subscription one?
Trading Edge Forex. Well, if it's a subscription, mate, then I'm sure you can dive into that. It's and Trading Edge commodities as well. But let's talk about the Forex. But yeah, so okay. Yeah, you can dive into it. Just have a little chat with James. He'll let you get on there.
No worries.
So this is the start of the week. This is the first day of the week. So the idea is that you're trying now. I'm not using any indicators whatsoever. So you know you can develop this as far in as you'd like to go. But what you're trying to do is sort of like find an indication on the hourly chart that you have a position that you can take. So if we were to look at this, then for example, all I would do is be looking at this particular trend along here and saying this is an uptrend here. So this is the start of the week. We're coming to the lows here. So you wouldn't be okay. Yes, you could sell off the daily pivot, but if you're looking at these lows, you would anticipate this bouncing. So you wouldn't be trying to get in down here. But as this starts to trend to the upside, then you're looking for the shorter term timeframes to start flipping around. You get a break and a retest, and then you've got the trade. Whether you sort of just want to enter off the line, whether with a stop at the highs, whether you look at a bar, that's really your call. If you don't like that and you still believe that particular pattern is existing, here's another really obvious one here. So the point is that this is really trying to set up hourly charts. You know, that the idea of sort of like analyzing the fundamentals for the week is to set up hourly charts. If you were to analyze something that is going to give you daily off the daily charts, then the Telegram channel wouldn't change very often. You know, you'd be looking at sort of like you'd be looking at the core aspects of the economy to last for at least a quarter. Now that is something that if people prefer, you know, is possible to do. That's absolutely fine. But the way that I'm looking at it is I'm looking at it and I'm saying, okay, which numbers do we have that are going to be released this week, which are going to affect the market, and how will it affect the market? And then I look through the historical data and say, well, okay, well, this is where it's leading me. This is what it's starting to kind of suggest to me that this is sort of what's likely to be sort of the outcome of the week. And because of that, that means I must be looking at hourly charts, or maybe 4 hourly, but probably hourly charts for setups. If you go any longer time frame than that, then you don't really have an opportunity, because if you look at a daily, you know, you're not going to get the move. And as I say, if I go on to a longer term time frame, then there's no point in me posting it every week. I might as well do it every month. But because we're sort of updating it every week, then I'm trying to focus on shorter term fundamentals rather than longer term fundamentals. So hopefully that makes it a bit clearer for everybody.
Might be a good idea to pin a post explaining that this is for the week ahead. I'm looking at 4 hourly and 1 hourly charts.
Yeah, possibly. Cool, mate. Yeah. Okay. To be honest, I was thinking about doing that, but I couldn't think of a way that I could put it quite succinctly enough. But I think you've just done it, so I think I will utilise that.
I'm working this. I'm telling you this on the basis of 1 to 4 hour charts for the week.
Yeah, that's good.
Or lower time frame. Yeah.
That's good. I like that. I can do that. But yeah, man, have a look on it, Jeff. Anyway, because it's sort of this is sort of what I'm looking at for.
It's my go-to.
Yeah, for the currencies, and so far it's been pretty accurate.
Nice. I will do that. What's it called?
Called Trading Edge.
Yeah, Trading Edge.
Okay.
Trading Edge. Yeah.
You blokes do a whole heap of stuff that I don't know about.
Oh, there you go, mate. Yeah, there you go. Trading Edge Forex.
Yeah.
And there's only 11 subscribers, so there's lots and lots and lots of people missing out.
Is that all there is?
Yeah.
How do you know that?
Because I'm a subscriber.
I see. So, right. I see the numbers are on there, are they?
See the top, right? 11 subscribers.
Goodness me.
Yeah, we need to turn that into 110.
Or is that a private one?
I don't know.
This is you, isn't it? I'm not following. You're on
What's
the
it called?
commodity. Oh, hang on.
No, I've got. There's 111 subscribers.
Why have I only got 11? Maybe this is just a commodity one.
Oh, the commodity one. Yeah, the commodity one's got 11. You're right. Yeah.
Oh, okay. So I'm not in your one then. Oh, I need to subscribe.
I am also the commodity one. I do both.
Okay, mate.
Yeah.
So there's another one as well, is there?
Yeah, the Forex one. The Forex one is the Forex one in some respects is probably going to give more opportunity. In fact, the Forex one has to be able to give more opportunities, because one of the things about the commodities one is that it's much more about the general overview of the way the economy is going. So you get the 10-year, and you can't trade the 10-year on MT4. So that's really a kind of an idea of of what are the Fed sort of up to, and how will that affect the 10-year. But that's more of a to give a view of how to trade the S&P or the Nasdaq. So it's more of a link item than something that's on MT4. You get more opportunities off the Forex one.
I'm going to email James straight after the show. Thanks.
Cool, mate. Yeah. And as I say, it's been. Well, I was gonna, I said it's been pretty accurate. It's been very accurate. I mean, so far since I started doing the heat map, it's been right every week. So it's a really useful tool for people. And as I say, if you and I suppose it's only really, I would encourage people to do it if you've got the time to trade on hourly charts. If you don't, then it probably will be interesting, but it might not be something that you can actually sort of then take into a trading environment.
That'd be me.
Yeah. Anyway, I reckon we've come to the top of the hour, mate. Unless there's anything else from you guys, we can.
Where's John? Is John sacked us? Have you heard from John?
No, I haven't heard from John. No, he's not been thinking.
Not been seen. I hope he's okay.
No.
I'll email him after the show.
He is okay. I got an email from him yesterday, so he is okay.
Okay, cool. That's nice to know. Got anything to look at, mate, before we go?
No, not really, mate. As I say, the FTSE, I am looking for a little bit of a bounce to the upside off these areas here. I'm looking for not to trade. I wouldn't trade it long. Think too dangerous. But I'd like to see it back up to this point before I trade it short. And then we'll see what happens. Gold is. I tell you what, gold is a headache, an absolute headache. Still in these trades on gold, it keeps coming up and it keeps coming down. It keeps coming up. I think I made a little bit of money on a hedge a couple of days ago, and then I gave it all back yesterday. So I'm just trying to be patient really with gold and see if it'll eventually take off. But so far, no good. The only reason, the main reason that I'm holding gold, I'm sticking with a position on gold, is because of the seasonal bias. If I didn't have that seasonal bias, then I probably would have given up on this by now. But because the seasonal bias is in my favour, quite significantly in my favour, then I'm quite happy to just hang on and see if it does eventually sort of do something of any use.
You do have a nice false break scenario there on the daily chart, by the way.
Oh, well, that's good to know, mate. Because I think you're probably you're probably better at trading gold than I am. But mine's much one more. Day. Yeah, but mine's just a big overview of. I just think that the gold is kind of the right products to kind of be trading long, but trying to get the correct setup. Goodness me, it's all over the place.
Well, we got it right. We got it right with the Three Little Indians, right?
You did. I didn't.
That went to support, and now you've got a false break coming back the other way.
He always gets that right.
He does always get it right. Yeah.
Three Little Indians is a classic. I love it.
I love it.
He said, you told me about the Three Little Indians, and it's a short, and I went and bought it. So
that's the sort of thing I do.
There you go. Yeah. Full trust in my analysis. Look at that.
No. No, but anyway.
Look, you've also look. I'll have to butt in. You've also got there an ascending channel that's come off the bottom, and now you've got a higher low. What more do you need?
Well, I don't. Well, I'm in already, mate. So what I need is a rally.
Okay, you need to get above your entry. Right?
Yeah.
That's all.
Significantly.
All right,
above
I might jump in.
All right, yeah, jump in so we can either be frustrated together or celebrating together. Fancy a sigh?
No, I'm not. No. I'm going to go the other way if you two are
all right,
I'm only talking about trading it to the top of that range. So if you can put the top of your range in there, which is the ascending channel, right? So put the equidistant in there. See if we can come up with a confluence. Now give me a horizontal level under those lows after the turnaround. Now up. Keep coming up to right up the top. There.
Oh, here.
Yeah, there. Now bring that down to the lows instead of the closing. Okay, now you're talking. Yep. What's that? 1900.
1900. Yeah, nice round number as well. Yeah.
Okay.
Like that. You're in there. All right. Well, let's see what that would look like on a weekly. See, the weekly looks all right because you kind of got that this thing here.
Yeah. You swing those. You swing the start of that trend line around though, and make it a trade line that gives you a false break the other way, which confirms my double top, right?
I mean, there are just patterns on there. Let's just have a look at what that does. There's another one there. You see, the thing is, now if I take these lines away just to make it less confusing, it really does depend on what you focus on, doesn't it?
Well, that's the current structure as I see it.
We got this as well. We got a sort of a downward channel, and if that was to break, then it gets us back to the highs, depending on when it breaks. Maybe not quite the highs actually. And that level is it's about 20, 30 in this kind of area. Yeah, as I say, man, I'm really on the fundamentals on this one, and as I say, the seasonal bias is for a long right up until around about September. So
you're not even seeing the head and shoulders there, mate.
What on the weekly?
Whatever chart that is, that's the that's the weekly. Yeah.
You're talking about this.
That or the one before it. Yep, the left shoulder before it. I thought you might be interested in that one.
Well, I would. Do you know what? I suppose this is
if
the
thing.
If the
seasonals weren't there. Okay.
No, I'm looking for technical setups to go long, because I just think that the dollar is, with the yield kind of pushed where it is, that is eventually going to tumble. And I think the dollar will tumble, and I think that many of the other markets will tumble as well. I think with a seasonal bias, it would suggest that the gold is also a long. So I can't look at the technical patterns short because it doesn't fit my analysis. It doesn't fit the sort of like the background analysis that this thing is going to go. Whether gold can get up to 5,000-10,000, I just don't know. But I just but to be honest, mate, it might end up being the case that I find this way too frustrating. And if it does do what you say it could do, and actually sort of like we end up more around about that 1900 level, then I may well just close it up and just forget about it from that point, or tighten stop sufficiently.
You won't forget about it if it gets 1900.
No, I won't know.
Here we go.
If it took off from there, I'd be incredibly frustrated. And I suppose,
yes,
you know what? We'll if we get to that point, let's talk about stop loss management. Get into this so we can talk about it together though, and be in the same.
All right, I'll get into it, but I'll only stay into it for 1900. Then it's a sell.
All right. We'll talk about it then.
Happy days.
Okay.
I've got
Thank you to you
nothing
guys
to report other than that.
Yeah.
Euro dollar, we've lost our edge. It's now been through the daily pivots, and pound, how's pound going? Hasn't triggered underneath the weekly. This could break to the downside. It's still in the range, so who knows? And the others I've given you, Aussie Kiwi hasn't triggered yet. Everything else is as it was. Euro Swissy, still looking to get back into that, but not yet, as I said. If I see a false break of resistance, then I'll be back in like Errol. Other than that, I'm all good.
Awesome, mate. Okay.
So we'll call it quits.
Call it quits. Thanks for coming in, Si. And we'll see you Monday, mate. And we'll see if we can, figure out how to trade some of these cryptos, because I think that would be quite interesting.
Awesome. All right, mate. Cheers,
Happy
guys.
days. Thanks, Si. Thanks, Ash. Thank you all
Thanks,
for being
mate.
our trading buddies. Thank you, Sam, for looking after us. And we will catch you all again on Monday. I don't think there's any holidays to be worried about. Have a great weekend, won't you? And again, thank you for being our trading buddies. Bye-bye.